Hello, everybody. Welcome back to my YouTube channel. Hi, everyone. Welcome back to my YouTube channel. Hoyundi Fulupelani Mashapa. Manayana wa Muvenda. And if you're here for the first time, welcome. If you're a returning subscriber, a veteran in this channel, welcome back for yet another exciting episode of Risk Money and Insurance. All right. And so today, I just want to say, if you haven't subscribed, please do so. Subscribe, hit the subscribe button, and also hit the notification bell as well so that you get notified whenever I post a new video, which will be on a Thursday morning at 7 a.m. Right? And so today I'm going to share with you guys, it's sort of my story, but we won't call this a story time because it's not really a story, but it's just, I want to give you guys a bit insight in terms of how I built my credit score from a score of 4. Yo, 4, like 4. It's like 4. From a score of 4 to 644, right? Within a space of a month. I am today to just give you guys just an analogy of what I did. Yeah, what is a credit score? Maybe that's where we should start. You know how in varsity we have GPA, like grade point averages? So yeah, in the real world, when you're adulting, it turns out there is a GPA for credit. So in South Africa specifically, guys, I went through the most. They won't give you credit. They will deny you credit if your credit score is very low, just like mine. Mine was 4. I tried to buy my phone on credit. They were like, no, your credit score, it's still low. I tried to get credit cards from the 4 major banks, the big banks in South Africa. They were like, nah, your credit score, it's still low. I literally tried everything. And because of lockdown last year, right, there was that thing where stores were not giving you like stores account cards. You were not allowed to open a store account card. So the only thing that I qualified for really when I started working was the store account card, which because of the lockdown regulation, they were not opening any new accounts. So I had to wait up until, September, because they were only issuing store account cards somewhere mid-September. I think they said 15th of September or so, if I remember correctly. COVID literally put me in the pits. And so there I was. I remember there was this one time where I was just like, how the hell am I gonna, increase my credit score? It was something that was stressing me out because, you suffer well a car, you suffer well a house, you suffer well all those things. And your credit score is so low, they're just like, nah fam, work on your credit score. And it's so bad because I had the mentality, you know what, I don't need credit, I can just buy whatever I want cash, and the tricky thing is, because you don't have any credit history, I mean, as a grad, I didn't have any credit history. The problem with that is they don't know what your credit how responsible are you with credit, right? So they kind of like, they don't trust you because they don't know whether you're gonna pay them on time or not because there's no history. They're trying to infer future behavior based on past behavior, and your credit record is empty, so they can't, tell. So what they essentially do is to penalize you for not having a credit history. They will charge you very high interest rate. 14%, 18%, 20%. And to be honest, before you borrow, just try by all means to make sure that your credit score is in order so that you save on interest rate, because it's lit. They will charge you very high interest rate. Okay, cool. We've gotten that out of the way. So essentially your credit score is what they use to measure your credit worthiness, to say how credit responsible are you as an individual. Are you the one person who will take credit and then run away, so they'll have to now go through the whole lawyer's process to make sure that they get their money back, or you're someone who is responsible, so you can actually, buy something on credit and repay whatever amount on time. And so it's very important. For me, like, I would pay my rent on time, which they will send me an SMS. There was an SMS that came through almost like every month to say like my credit score has been adjusted accordingly. But then the thing is, it was still 4. They were sending me the SMSs, but it was still 4. So I didn't understand, like, what's popping? I mean, I'm paying on time. Sometimes I'm even paying earlier. What's going on, right? And then a friend of mine told me about young professionals account, right? It's a private banking service, which a couple of banks actually have, like the big banks, your FNB, your Standard Bank, your Absa, your Capitec as well. Also Time Bank, I think, has it. So all these banks, they have this young professionals account, right? So the young professionals account actually is just like designed to help young professionals. I took out one with InvestCheck because they're good. Their rates are good if you're going to buy property or if you're going to finance a car. And also they don't really check your credit score. They give you credit based on your earning, right? And the profession that you're in. And as actuarial graduates, we actually fall within the top 1% of the most paid graduates in South Africa. So I was like, okay, cool. They're not going to consider my credit score of 4. And they also give you access to a credit facility, which you can use the credit facility as a credit card. So essentially, you take your investor card, you buy whatever you're buying, and then you transfer the money. You repay whatever balance it is, you repay, and then you're sorted. So I checked my credit score around the 15th of November. It was still 4. It was very, very disappointing. It was still 4. And so I thought to myself, that was beginning of November. I thought to myself, okay, cool. To increase your credit score fast, you also need like different lines of credit. Like, you can have a credit card, you can have a store account, or you can have something like your phone on credit or whatever. So like at least 3 lines of credit. So I thought to myself, okay, cool. I can just get 2 lines of credit, use the credit facility on my investor card, and also go to a store. I went to Sportsin and I got like a store account card from them, and I immediately like bought a dress right from them. Okay, cool. And then I made sure like after 2 weeks I repaid. So they wanted like 60%, 15%, I think, 15% deposit on the outset. So I paid that. And then 2 weeks later, I paid like the remaining balance, right? Okay, cool. And then with my investor card, it came through somewhere around mid November, so 15th of November. And when I had to go buy groceries, I didn't use like my normal card. I used my investor card, the credit facility, to actually pay for my groceries, right? So I paid for my groceries, and then a week later, I transferred the money to my investor account and then repaid that balance which I had, which was negative, right? And so I kept on doing that. Like whenever I go shopping or do whatever, I just use my investor card, to pay for whatever that I'm paying. And then after a week or 2 or a few days, I just transfer the money. And then lo and behold, on the 15th of November, I'm like, okay, cool. It's been on the 15th of December. I'm like, okay, cool. I've been using this thing for a while now. Let me just go check actually. How much is my credit score? So I use ClearScore in order to check how much, to just get access to my credit report. I use ClearScore. But then there are other options that's called Xperia. There's also Noodle as well, as in like noodles, but Noodle, you can also get your credit, report for free. So I checked on my ClearScore and I was like, Jesus, behold, hey, Jesus. My credit score was 644. And this was just after a month, you guys. And the national average, in South Africa, a credit score, national average score is like 561. I'm like, within a month, I'm already above national average, So the hustle from now on is to just, keep paying my things on time, to just make sure that I don't damage my credit score. And it's also important, even though you don't really want to check your credit score or your credit score is already like great, it's also important to just get that credit report, because what may happen is you might think that you closed accounts with some stores or whatever, and turns out they didn't really, pull through, they didn't really cancel your account. And so that account which you are thinking you close is damaging your credit score. So it's also important just to see like, okay, what is it that I owe? How is my credit score looking? How is my credit record looking, so that if there are any outstanding issues, you can contact the relevant people and you can then fix and put your house in order. But besides that, having a good credit score means that you actually get lower interest rate. Low is relative, it depends on what you mean, but normally people will say it's low when they're comparing whatever interest that the bank is charging you, if they're comparing that to the prime interest rate, which is like 7% at the moment. So if you're getting a deal that is around 6%, 7%, then like, okay, cool, I'm actually being charged like a reasonable interest rate. So for you to get there, you need to have a very good credit score, and to just ensure that over time you build it and you pay your accounts on time. And the crazy thing is, you actually need to take out credit in order for you to build your credit score. And so because of that, you also need to be very much responsible and disciplined, because having access to all these credits that are out there doesn't mean that you must go out there and spend like a moron. No, it doesn't mean that. You don't go out there and spend just because you have access to credit. Do know that this is credit and you need to now repay whatever amount you will use. So I think it's just something that you need to budget accordingly and use the credit that you will be able to repay within the time frame, within because some banks, if you're using a credit card, for example, they will give you like 3 months or a month with no interest bearing on whatever amount you borrowed, right? And so do actually take credit responsibly, because at the end of the day, if you take it out and you can't pay, you undo the whole process, you damage your credit score. So checking your credit score regularly as well, and just reviewing that report is very important for you to just understand where do I stand at this point in time. So my question to you, because we've arrived to the end of this video, is number 1, do you know your credit score? Number 2, do you actually have plans as to how you will improve your credit score? Because it's important in this day and age, whatever you're doing, whether you're buying insurance, whether you are taking out a loan with a bank, when employers are doing those background checks on you, they will check your credit score. And I know with actuaries, you can't be an actuary who is bankrupt. It's against our laws. You can't be an actuary and be bankrupt. You can be an actuary with a very shady credit report, So it's also important to just take into account these things, because the professions that we're in, especially for people in the financial services, they need to take that into account, that actually as a professional in the financial space, you need to get your credit in order. So we have come to the end of the video, and I hope someone has found this video, useful. And before I go there, I just had a thought right now to say, if you're in varsity, final year, third year, second year, whatever, and you want to sort of like get a head start to build your credit, I'd say get a store account, get a store account card. But at the same time, this is like a big disclaimer, right? Don't take it out, and spend beyond your means, because it will just ruin your credit score. It will undo whatever we're trying to do right now, which is to make sure that you have a good credit score, right? So if you can take that account, and whenever they give you money to go buy, clothes or whatever, you can use the card to pay, for the clothes, take them out on credit, and then like 2-3 weeks later, take the money that they would have given you to actually repay, that store account, whatever it is, to repay them, right? And that will help you to build a good credit score. So by the time you start working, you won't have a problem to say, oh my gosh, how am I going to start building my credit score? But with any given amount of credit, it calls for great responsibility. You need to be responsible. So if you get that store card, you won't use it well, then don't. But if you genuinely just trying to build your credit score, then go ahead, take it out. There are some stores that actually don't need you to have a salary. Even students can actually get those store accounts. So go there, try it out. They actually offer you. I remember when I was in varsity, they used to offer me. So they can actually offer you, and if they are, what you can do is to just make sure that you don't spend what you don't have, right? You spend what you have and you build your credit score. It'll be very beneficial for you in your future, because a good credit score is important. And so everyone, thank you so much for watching this video. I hope you found it useful, and don't forget to like, comment, share, and subscribe, especially for those people who don't have a great credit score. Just share this video with them. Maybe this will help them out to improve their credit score. But anyways, I love you so much. Oh, bye.